Hello, welcome to Accounting with Arpit Garg. Today, we are again going to solve a question of admission of a partner, which includes all the topics. Let's start with our question. Be prepared with your copies and pen to solve the question with me and see the sequence in which we can solve the question easily. Let's start. So, as you can see, there are 9 pages. So, let me guide you through every page first. On our first page, we have our question. Then on second and third page, working notes. Then on next 2 pages, journal, revaluation account, partners capital account, cash account, and balance sheet. Let's start with our question. A and B are partners in a firm sharing profits and losses in the ratio 3 is to 2. Their balance sheet as at 31st March 2020 is given below. Capitals, General Reserve, Workmen Compensation Fund. This is same as Workmen Compensation Reserve. Creditors, plant and machinery, land and building, debtors, stock, cash. They agreed to admit C into partnership on the following terms. All debtors to be considered as good. Value of land and building to be increased to rupees 45,000. Value of plant and machinery to be reduced by rupees 5,000. Liability against workmen compensation fund is determined at rupees 5,000, which is to be paid later in the year. C to bring in his share of goodwill of rupees 25,000 in cash. C will further bring in cash so as to make her capital equal to 20% of the total capital of new firm. Prepare journal, necessary ledger accounts, and balance sheet of the new firm. Now, this is a very short question, but yes, we will learn how to prepare journal entry and ledger accounts simultaneously. Let's start. So, the first thing we need to do is, as I already told you, to calculate our new profit sharing ratio. But can you see where the share of new partner is given? In adjustment F, C will further bring in cash so as to make her capital equal to 20% of the total capital of new firm. So C's share is 20%. Okay. And the old profit sharing ratio of A and B is 3:2 as given in first line. Let's calculate our new profit sharing ratio. A working note, calculation of new profit sharing ratio. First, old profit sharing ratio is given to us 3:2. Then total share is 1. Now first we will give to incoming partner. So C's share is 20%. Now 20%. Percent means per means out of, cent means 100. So 20% means 20 out of 100. Okay, it's 20 upon 100, and when we do it to lowest term, it comes 1 upon 5. Then we will calculate remaining share, whatever is left after giving to C. So 1 minus 1 by 5 comes 4 by 5. Then this 4 by 5 will be shared by old partners in their old profit sharing ratio. As I told you while studying change in profit sharing ratio. If you have not seen that, you can go to that video and watch the concept and check out all the methods of calculating new profit sharing ratio, because in exam any method can come. Now A's new share is 3 by 5, his old share. You see, old share was 3:2. So 3 plus 2, 5. 3 upon 5 of 4 by 5 remaining share. It comes 12 by 25. Then similarly for B, 2 by 5 old share of 4 by 5 remaining share will give 8 by 25. Then new profit sharing ratio of A, B and C. I told you we will write the names in the sequence in which they are given in question. So we have calculated C's share first, but we will write A, B and C only. So it's for A 12 by 25, B 8 by 25 and C 1 by 5. Now we will make denominator equal. So 12 is to 8 is to 5 5s are 25 and 1 5s are 5. So 12 ratio 8 ratio 5. That's it. Let's go back. Now next work is to transfer balances. Let's see, we are making revaluation account. It is not having any balance. Then partners capital account 20,000 and 25,000. Okay. And cash account 7,500. Let's go to our capital account. By balance BD 20,000 and 25,000. Then let's go to cash account. To balance BD being our asset, it has debit balance 7,500. Okay, then let's check our adjustments. All debtors to be considered as good. It means we don't need any provision for doubtful debt because all our debtors are good and they will pay us the amount. Debtors are of 47,500 and provision for doubtful debt 10,000. So we don't need this 10,000 now. Let's cancel this. Now provision is having credit balance. So to cancel it, we will debit provision and we will credit the valuation account because this is our gain. Then let's transfer this to the valuation account. On revaluation account, credit side by provision for doubtful debt 10,000. Then in balance sheet also this entry will come. So debtors 47,500 less provision for doubtful debt we will not write because we are not having any provision for doubtful debt now. Then next, value of land and building to be increased to rupees 45,000. Once again, increased to rupees 45,000, which means we have to make land and building from 35,000 to 45,000. So we have to increase land and building by rupees 10,000. Let's increase this. Go to balance sheet. Land and building is our asset. Asset has debit balance, and to increase debit we debit. So debit land and building 10,000, and as our value of asset is increasing, so we are gaining something. All incomes and gains are credited. Credit revaluation account. Okay, done. Let's go to revaluation account. As this is our gain, it will come on credit side by land and building 10,000. Then let's go to balance sheet. We remember that once a entry is read, we will complete it everywhere. Land and building 45,000. That is 35,000 plus 10,000. And you can write that in bracket also if you want. Next, value of plant and machinery to be reduced by rupees 5,000. Now check out the adjustment B and C. That was 2 rupees 45,000. It's by rupees 5,000. Okay, so plant and machinery is of 30,000 rupees. Now we have to reduce this by 5,000. It means we have to make it 25,000. Okay, let's go to journal. Now, plant and machinery is also our asset. Asset has debit balance. To decrease debit, we will credit. So, credit partner. So, credit plant and machinery account by rupees 5,000. Then, as the value of our asset is decreasing, it means we are losing something. And as we are losing, all expenses and losses are debited. And one more thing, credit side we have already mentioned. Now to make it double entry, we have to write something on debit side, and we have only one account to write, that is revaluation account. Let's go to post this entry in revaluation account. So all expenses and losses are debited. So on debit side, we will write 2 lakh plant and machinery rupees 5,000. Done? Not done. Balance sheet is left. Plant and machinery 25,000. That is 30,000 minus 5,000. Okay, now it's done. Let's go to next adjustment. The liability against workmen compensation fund is determined at rupees 5,000, which is to be paid later in the year. Okay, so workmen compensation fund is of rupees 12,500. And from this 12,500, from our piggy bank of 12,500, we need to pay rupees 5,000, and that too not now, later on. Okay, let's go to our journal. So no need to prepare working note here as adjustment is not there. This is can be done directly by passing single entry. Let's check it out how it is done. So workman compensation reserve is written on liability side. Workman compensation reserve has credit balance. Liabilities has credit balance. From any of the way, workman compensation reserve has credit balance. So now workman compensation reserve or workman compensation fund is one and the same thing, but as fund is written in question, you will write fund only because writing reserve can decrease your marks. So workman compensation fund has credit balance. To cancel it, we will debit. As while studying concept, we studied that all these reserves, accumulated profits and losses are distributed among all partners in their old profit sharing ratio before any new partner joins the business. Once again, all reserves, accumulated profits, and losses are distributed among all partners in their old profit sharing ratio before joining of new partner. So we will cancel this amount. So we are debiting this. Now from this fund, first we need to pay to outsider. First we need to pay our liability. So to workman compensation claim rupees 5,000. Now deduct this amount, we get rupees 7,500 left with us. Okay, then that 7,500 let's distribute among partners A and B because C is not here till now. And in ratio 3 ratio 2. Okay, so 7,500 into 3 by 5. 7,500 into 2 by 5. We get 2 A's capital account 4,500. 2 B's capital account 3,000. Now let's post this entry. We are not making workman compensation fund account, so no need to post this. Workman compensation claim account we are also not making, but we are doing the entry wherever it is needed. So let's go to balance sheet, and on liability side we will write workman compensation claim 7,500. Then next, to A capital account and to B's capital account. Okay, as capital accounts are credited, so on credit side by workman compensation fund account A 4,500, B 3,000. Done? If not, you can check it out once again because after completing the question, just watch it once again to brush up how we are doing this. Next, first let's complete it at once. C to bring in his share of goodwill of rupees 25,000. Okay, now as C is bringing rupees 25,000, let's record this first. So page is full, we will not pass half of entry on both the pages. So let's make it here. As we are getting cash, so cash account debit 25,000. Now we are getting this cash for goodwill, which C is bringing. And while studying concept, we studied that The share of goodwill which an incoming partner or new partner brings is written as premium for goodwill. So, 2 premium for goodwill. Then this premium for goodwill will be distributed among old partners in their sacrificing ratio. Now I told you that I never calculate sacrificing ratio. What I do, I just distribute this 25,000 in old profit sharing ratio and new profit sharing ratio, and then I calculate our next entry, not 25,000 into his share, so that to calculate goodwill of the firm. Now, but here I will not do that. Why? You see, we saw our calculation of new profit sharing ratio. Here you will see that whatever remaining share was there, 4 by 5, was distributed among A and B in their old ratio only. So in this type of portion, when you are giving old profit sharing ratio and new share directly as a percentage or as a fraction, in this case, old profit sharing ratio is our sacrificing ratio also. So I know that sacrificing ratio is 3:2. Let's go there and write it. So premium for goodwill account debit to A's capital 25,000 into 3 by 5 to B's capital 25,000 into 2 by 5. We get 15,000 and 10,000. Now let's post this entry. Premium for goodwill account we are not making. Partners capital account as we credited. So on credit side, buy premium for goodwill 15,000 and 10,000. Next, as we got cash, so let's check. Okay, we did not pass here. So 2 premium for goodwill 25,000. Next entry. C will further bring in cash so as to make her capital equal to 25% of total capital of the new firm. And as told, this we will calculate while finding balance of capital account. While we will come here to calculate balance CD, at that time we will pass this adjustment. Now let's check whether everything is done or not. Capital account we will write from capital account, our ledger, general reserve 30,000. This is reserve, so will be distributed by old partners in their old profit sharing ratio. So as partners will get this, it will increase their worth. So we will credit their accounts by general reserve 30,000 into 3 by 5, 30,000 into 2 by 5. It comes 18,000 and 12,000. Next, workmen compensation fund already done. Creditors 37,500. Let's come here. Creditors 37,500 as there is no change. Then plant and machinery done. Land and building done. Debtors done. Provision for doubtful debt, now they are not there. Stock, okay, 15,000. Let's go to our balance sheet as there is no change. So stock 15,000. This is also done. Now let's go to our journal, and now the work is to find balance of revaluation. So revaluation account credit 10,000, revaluation account credit 10,000, revaluation account debit 5,000. Okay, and here it is not there. So with this we will find balance of revaluation account on debit side as 15,000. Now this will be distributed among old partners. So to A's capital 15,000 into 3 by 5, to B's capital 15,000 into 2 by 5. Let's go to our revaluation also. Here also you can find as the balance of credit side is 20,000, debit side is 5,000. So we will get balancing figure 15,000 on debit side. Then to gain on revaluation, transferred to A's capital account, transferred to B's capital account. Okay, then let's go to our capital accounts. As this is gain, it will come on credit side by revaluation 9,000 and 6,000. Now let's calculate our capital. Okay, but first we need to calculate capital of C. Let's see how this is to be done. C will bring in cash so as to make her capital equal to 20% of the total capital of new firm. 20% of total capital of new firm. So 20% we know 20 by 100, but we need to find total capital of new firm. Let's calculate this. So first, let's come here. This is our second method which we studied in our video of adjustment of capital. Let's see. A's balance is 20,000 plus 4,500 plus 15,000 plus 18,000 plus 9,000. That is 66,500. For B, 25,000 plus 3,000 plus 10,000 plus 12,000 plus 6,000. That comes 56,000. Okay, but we will not write this here. Let's go to our working note. Calculation of new partner's capital. Now, these two methods we read in our one of the video of adjustment of capital to calculate new partner's capital or to calculate old partner's capital. Let's do it now. If you want to revise the topic, you can watch that video. Here I will just discuss the topic which is in this question. So, total adjusted capital of A and B 66,500 plus 56,000. It comes 1,22,500. Remember, our capital of A and B was 20,000 and 25,000. But we are not taking these amounts. We are taking another amounts. Why? Because it is written adjusted capital. And here in our partner's capital account, with this 20,000 and 25,000, we just adjusted workman compensation fund, premium for goodwill, general reserve and revaluation to get adjusted capital. Then we added adjusted capital of both to get 1,22,500. Now calculate old partner's share on the basis of new profit sharing ratio. So new profit sharing ratio is 12 is to 8 is to 5. So for A, 12 upon 25. For B, 8 upon 25. C's we will not take because we are taking off old partners. It comes 20 by 25. Calculate total capital of the new firm. 1,22,500 into 25 upon 20. We will reciprocal the share. So it comes 1,53,125. Now take C's share 5 by 25. Multiply the amount and we will get 30,625 as C's capital. Once again, first we will calculate total adjusted capital of A and B. Then we will find total share of profit of A and B. Then we will divide the amounts to get total capital of the firm. With that total capital of the firm, we will multiply C's share to get C's capital. That's it, 30,625. Let's go to our journal entry. Partner will bring cash, so cash account debit, and this cash is for capital. So 2C's capital 30,625. Let's go to cash account. 2C's capital 30,625. Let's go to capital account. Buy cash 30,625. Now balance these. For A and B, I know 66,500 and 56,000. And for C, 30,625. Let's balance these to complete this account. And let's go to our balance sheet to record capital of A, B, C and total 1,53,125. Now our last account is left, that is cash account. Let's balance this 63,125. Let's add these. Now completed. Let's go to our balance sheet, write cash. Done. Now let's add amounts on both the sides to check whether our balance sheet is getting equal balance of assets and liabilities or not. So We are getting 1,95,625 on both the sides. Congratulations. Our question, our solution is absolutely correct. That's it for today. If you like the video, please hit the like button, subscribe the channel and press bell icon for all latest updates. Thank you. This is Accounting with Arpit Garg signing off. Bye bye. Take care. Keep learning. Stay safe. Jai Hind.